Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, August 14th, 4:42 p.m. Eastern Time. Coming to you from Fort Lauderdale, Florida with tonight's Revere Roundup Daily Market Insight video. Market state, we're upgrading this to a short-term uptrend. This was the second close above the 21-day, along with getting back above the 50-day. So upgrading that. And if we come over here and look at the trend gauge, some upgrades as well. Market leaders, which we had on for a bearish downtrend for a while, upgraded them to neutral today. So we have their yellow sub arrow there. Short term 21 EMA. This as well, getting the green arrow from neutral to up. Medium term, this is our 50-day. This is getting another upgrade from neutral to up. We got to close above the 50-day today. So that's a key line in the sand, and we'll see how that reacts later this week. And then long term, this is our 200-day moving average. That one has the green arrow as well. So what happened today? Well, CPI came in line, and then it was kind of mixed action across the board. And when we look at the final numbers, you'll see 21 over 21 up 0.48%, 11 green, 4 neutral, 6 red. Big 8 down 0.21%, RG8 down 0.39%, S&P up 0.38, equal weight up 0.2, QQQ pretty much flat up 0.05, equal weight down 0.13, Dow Jones Industrial Average up 0.61, mid caps down 0.04, Russell 2000 down 0.56%. 60/40 up 0.21%, and in-house GROTECTION up 0.39%. So as always, let's get into the inter-asset correlation. As usual, chart of the S&P 500, and now, day 7 up off the lows, and this is our second close back above the 21 and closing just right above the 50-day, which have been below for quite some time. So that's a key. And then you can also see this 80 EMA starting to curl, this 21 starting to curl. And what we'd really love to see is see this 8 EMA get back above the 21. See what happened when it did it here, and you can see the nice tradable rally that led. But overall, pretty strong off the lows so far. And looking at the other side, this has had some power, although volume is declining. So markets can go in a lockout. This could just continue to lock out, or we could backfill in here, build a higher low, and then shoot through 5,500. Open intraday, and you can see pretty tight range today. Not a lot of volatility. Gap down a little initially off the open, rallied up, and then closed mid-range. Just not a ton of action intraday today. QQQ, again, second close back above the 21, strong push off the lows, still has this 50-day above to work with. Dow Jones, super strong today, firmly above the 50-day, 821, although this relative strength line's lagging a little bit, but this one looks pretty good. Mid caps, this is why I had mixed action, right? Strength in the S&P and NASDAQ, but this one could argue it's forming a bear flag here off the 50 and 21 day. We'll see. From foul moves come fast moves. So maybe if this doesn't play out and this takes out that upper trend line, that would invalidate the setup. Russell 2000, again, relative weakness today, down 0.5%. And I mean, this looks like a pretty textbook bear flag off the 50-day. Whether that plays out, we have no idea, but something we're watching, and we'll see. And again, clearly relative strength has been lagging. And we mentioned this on videos before, is that indexes don't often outperform significantly for an extended period of time. It usually, the rotation trade comes back on. And obviously we had that major period of outperformance from small caps, and now we're getting that underperformance right now. The VIX continues to plummet down 12% today. And just, it is hard to believe off that yen carry trade, this spiked over 60, and now 2 weeks later we're firmly below 20 and below 18. So volatility might start to dampen. And that's what we said, is when the VIX starts to come back, that gives us better opportunities as swing and position traders. The dollar, putting an upside reversal today, kind of broke lower out of this bear flag, but held these recent lows and putting a hammer there. And with the dollar strong, we're seeing that weakness in gold. So again, it's just every time gold comes into here, it seems to get rejected. And something that we do look at is commitment of traders reports, and this is an aggregate of positioning for futures contracts from floor traders. And positioning in gold, precious metals has been heavily skewed to the long side. So that could be a potential reason why this continues to fail on the breakout. And obviously down here, when it broke out from 192, people were way off sides gold. So maybe this is, everyone sees this now and everyone already bought, so it can't break out as who's there left to buy. Gold stocks looks fine, just kind of against this downtrend line. Silver, again, weakness, relative strength line in a downtrend. Bitcoin kind of has that bear flag look again, pretty strong move off the lows, rejecting the 2150s down sloping. So we'll see. And quick thing, I'll pull up, and a lot of these, coin looks like it's hanging on for dear life here. Bear flag off the 200-day, MSTR, another classic bear flag. And if you look at some of these miners, cores, Wolf, that had huge moves, are failing pretty hard. So we'll see with Bitcoin. Total bond, again, trending really nicely. TLT, similar look. And with those, rates are moving lower and kind of similar. These are falling through the downside, had similar bear flags to the Russell. So, these just continue to move lower. Alrighty, that's the inter-asset correlation. Let's check out the tail of the tape. It's definitely some changes. Markets say we upgraded this to a short-term uptrend with confirmation from leadership and the indexes. News today, we got that inline CPI print that prompted that initial pre-market gap, but roughly was a flat open, only up 15 basis points. Jobless claims tomorrow and retail sales on deck. So again, the economic data isn't stopping, stuff to look out for. And some of the keys, holding above the 21-day on the S&P and QQQ, mixed reaction off CPI, but overall leaders continue to stay pretty strong. And there's no issue finding strong stocks. More so the issue is finding low risk entries and clean setups. Day count up 4 days above the 8 EMA, 2 days above the 21 EMA. Some sectors, financials were strong, cyber, staples, industrials, healthcare, real estate. Weakness, Bitcoin, biotech, communications, regional banks. In-house, our adjusted beta got moved up to 1.03, and we bought a position in Race. This is Ferrari. We added to UPRO and then sold ON from yesterday. So let's get into some charts of interest. All right. So yeah, I mentioned that mixed action with the week. Let's talk about some of the new buys. Race. This is Ferrari. This is breaking out of a stage 2 97-day base on volume. This is a pretty textbook base. You can't really ask for them to look better. Powered through that 442 pivot and never looked back all day. Seeing that relative strength line clear, a big downtrend line falling through to the upside. And if you look at this weekly, I mean, you really don't find bases that look this constructive and orderly. It's breaking out on volume. That was the signal. If you look at the intraday chart, just clear institutional buying all day. So we took a position in this one, and yeah, the luxury consumer isn't doing too bad if you got Race breaking out into all-time highs. And I did see something with their backlog, some new vehicles that they released, and it's like a 4-year backlog to actually get the car, which is just pretty crazy. So good action from there. And then ON just kind of failed, couldn't build on that shakeout on earnings from yesterday. And then let's look at the current names we have. Lilly up 2.6%, just super strong here. Can't really ask for more. So that one continues to hold up. And if we look at XLV, this is the healthcare ETF. And again, this is looking to come out of a strong base. So the theme is still there with healthcare, that GLP-1, etc. ITB down on the day, kind of just hovering here at this 21-day race. I covered Kava. Great action here. The next big test is this 98 level. 100 level is a big Livermore psych level. So obviously the last 3 times that it's came into this 97, 98 level, it's rejected, but overall strong at 1.39% on the day. Earnings are in 8 days. Uber, another one's pretty strong action, up 1.22% and continues to build after reclaiming this 200-day. And we do like to see all these moving averages starting to hook back up. Palantir, strong as well, up 2% on the day and continues to build on that strong last week. And then some names that popped up on the scans today on volume. New Holdings somewhat fits this financial banking theme. So pull chart XLF. This continues to be strong. It pulled back the overall market. And now it's recapturing all the MAs. And, a lot of these charts have this very similar look. You obviously had huge fear in the market that prompted some irrational sell-offs below a lot of key moving averages, 50-day, and a lot of things had, capitulation volume-ish, and now they're, 6, 7 days up. So could be a lockout rally. We don't know, or a lot of these stocks come back in and backfill, but that's kind of the theme of charts that when we're looking at. But NU, this one had strong earnings, up 5% today on 132% above average volume. Decent there. And this name has been a rock star, continues to trend higher. And then Shift 4. This is another one that popped up. This is breaking out of a flat base on volume today. Look at this accumulation recently. And this is another payment processor name. Covered this one on a podcast quite some time ago. Price never cooperated, but the fundamentals have always been there. So it looks like people are getting back into this one. And, the weekly has been choppy for some time, but, through 80 could see this 100 level, and then through 100, these all-time highs all the way up here. Some other charts of interest. I noticed insurance stocks are breaking out of pretty sound bases. PGR's one, and then Allstate's another one. So those were strong. And then some other banks. Goldman Sachs continues to build right under that 500 key level. And then along with JPM, not bad as well. So seeing buying in financials as well. And then I wanted to go over the big tech names, the 4 that are showing relative strength, and then 3 that are showing relative weakness. So Netflix is one, and this just super strong multi-day push in a pretty big base. This is, it was looking ugly here, and then it had that kind of flush everyone out, and now it's coming back up. Apple, this, when the news was announced that Buffett sold half his stake, the market reacted pretty irrational, but I guess right off that 200 level, technicals don't lie, right? It undercut and reclaimed 200, which was the prior base breakout. Now it's all the way back up to 221. Meta, we've been mentioning this one too, just in a big base. See if we can get some volume. Volume has been lighter on the way up here, so something to know. And then Nvidia acting like a rock star the last couple days, but now big test here against the 50-day. Avgo, another semi. This one's closed right under the 50-day, but if we look at SOX, this is the semiconductor index, rejecting the 21-day here. Would like to see this relative strength line kind of curl back up. If we just look at some other ones, you have ARM not doing a whole lot, and then some not necessarily semiconductors, but like names like Dell, back into the 200-day, Micron. These have had some huge moves down. So And then some of the laggards from big tech. Google, they've had some lawsuits here. This is kind of breaking low out of a bear flag. You got the 200-day right here. Tesla, you know, a lot of people were pretty excited about it when it broke out, when it reclaimed the 200-day, including us. And it had those ant signatures coined by David Ryan, but this has come down pretty quick. Another bear flag-ish look, sitting right around that 200 level, which has been important. Microsoft undercut and reclaimed the 200-day, and now it's coming back into the 21-day. So kind of mixed action from big tech names, but a lot of these big flushes have been bought. So we'll see how they act, if they can form some better charts, because some of these charts still have some repair to do after big breaks on volume. But seeing a strong snapback so far across the board. And then just some other charts of interest. Just cover ServiceNow, which I've been talking about, and haven't seen that power. It is trading above 815, closed the day at 819. One of the better bases that we're seeing, and just kind of meandering right around this 800, 815 level. So that's another one to watch. And yeah, so like I mentioned, some economic data in the morning, and kind of the same message, same story. Strong 6-day push off the lows. Just thinking of scenarios as there's been opportunity to get exposure, which we have done, and it's proved to work. But 6-7 days off the lows would be totally normal for a backfill back into here, just a normal digestion. Or we've seen when sentiment gets really bad in a weekly uptrend, right? Zooming out, big picture, the market is still in an uptrend. You can see sometimes off the lows we can get these lockout rallies. Here's a good example. Multiple days up in a row continued. You had one digestion day, and then really it was off to the races this whole time. So just always open mind to both scenarios. Just being prepared. So that's going to wrap it. That's all I got for you guys today. I hope you've been enjoying me taking over this week. So, and yeah, if you ever want to reach out, my email is connor@revereasset.com, and you can reach out to Dan or Don at revereasset.com. Phone is 855 Real Wealth. That is 855-732-5932. And if you're interested in becoming a client, please reach out. And with that, I'll wrap it for Wednesday, August 14th. This is Connor Bates with Revere Asset Management, telling it like it is. Thanks for listening, and good luck with the rest of the trading week.